I will be able to send them the recording. As I said earlier, my name is Tony Lee. I'm the compliance supervisor here at Alabama Housing. To tell you a little bit about Alabama Housing, we were formed in 1980 by an act of the Alabama legislature. We are a public corporation and instrumentality of the state of Alabama, and we're dedicated to serving the housing needs of low and moderate income Alabamians. We are the state housing authority, but we are not affiliated with Alabama. We don't receive any funding from the state of Alabama. We receive all of our money from being a master servicer, and we currently service all of Alabama housing loans, Mississippi housing loans, North Carolina housing loans, and Arkansas housing loans. Since 1980, we've helped about 75,000 Alabamians get into a home using our programs. Currently, we have two programs. We have the Step Up program, which is a down payment assistance program. We also have the Mortgage Credit Certificate, the MCC program. I'm only going to be talking about the Step Up program today. If your company is approved to do MCCs and you would like to have an MCC training, get somebody to email me and we can set up a Zoom training to talk about MCCs as well. Here at Alabama Housing, we do not originate loans. We depend on a network of participating lenders throughout the state of Alabama to originate the loans, make sure the borrowers meet credit qualifying purposes, and then the lender actually applies for the borrower on our program. We are a master servicer and we service under the name Service Solutions. How the process works: borrower goes into the lender's office, gets pre-qualified to buy a home. The lender makes sure they meet credit qualifying purposes. When they do, the lender will then lock in or reserve them on our lender online site. The lender will then submit steps 1 and 2 to us for us to review. We will review steps 1 and 2 to make sure it meets our compliance guidelines. If it does, we will issue a conditional commitment, which will be your approval. The loan closes in the lender's name. The lender will table fund the first and the second mortgage and the AIS grant if applicable. I'll talk about the AIS grant a little bit later. The lender then submits the closed loan package to Alabama Housing on our lender online site, and then we service the first and the second mortgage. So the Step Up program, the first mortgage can be either an FHA, a VA, or conventional. The conventional is tied to the Freddie Mac program, so it would have to be an AHFA Advantage mortgage. But if your first mortgage is going to be an FHA, for the first mortgage, you've just got to follow standard FHA credit guidelines. For a VA, same thing, you follow standard VA guidelines. For the conventional, it's got to be a Freddie Mac product, and it's going to be tied to the HFA Advantage. There's two different options for the conventional. We have one that's at or below 80% of Freddie Mac's AMI, which is their area median income, and one that's over 80% AMI. The second mortgage is going to be a standard second mortgage. It's a true second mortgage. It's a 10-year fixed mortgage. You're going to need to disclose on it just like you would the first mortgage. The interest rate is going to be the same as the first. So if we're quoting today 6.25 on FHA, that means you would have a 6.25 first mortgage and a 6.25 second mortgage. It's a 10-year fixed mortgage, and the assistance is going to be the lesser of 4% of the sales price or $10,000. So on an FHA, you're required to put 3.5% down. That means you would have an extra 0.5% that you can go towards closing costs and prepaids. On a conventional, you're required to put 3% down. You would have an extra 1% to go towards closing costs and prepaids. And on a VA, of course, there's no down payment, so you would have the whole 4% that can go towards closing costs and prepaids. Now, the second mortgage, there's no minimum. So what I mean by that is if somebody had some money they wanted to put down and then wanted to use our second mortgage for, if they were supposed to put $5,000 down, they wanted to use our second mortgage for only $2,000, they can. There's no minimum. They don't have to get the max amount. They can get any amount under the max they want. and there's no prepayment penalty. So if the borrower gets the second mortgage and decides they want to pay it off early, they can. We're not going to penalize them. So we have two different lock periods you can pick. We have a 30-day lock, which costs a 0.5% commitment fee, and a 45-day lock that costs 0.75% commitment fee. This fee is a non-refundable fee, and it's required within 72 hours of making the reservation. If the lender sends the check, they can send a lender check. If it comes from the borrower, it has to be either a cashier check, a money order, or we really prefer a wire, because we do have an account that's set up just for Alabama housing loans, the MCC and the Step Up, and that money goes in that one account, and that makes it a lot easier. But we will accept a money order or cashier check from the borrower. So we do have extensions we offer. We offer a 15-day extension if you need one, and that costs 0.25% of the total loan amount. But the maximum we can hold a reservation is going to be 60 days. So that means if you lock in for 30 days, you can buy two 15-day extensions. If you lock in for 45 days, you can buy one 15-day extension. The fee is due within 72 hours of requesting the extension. And if the loan's canceled for for any reason, the borrower will be subject to worst case pricing. Now, we do offer a free 2-day extension. So like if you have one that's expiring on a Thursday or Friday and you're closing on a Monday or Tuesday, or closing on a Monday, if it's expiring on Thursday, you close on Monday, you can get a 2-day extension. If it's expiring on Friday and you're closing on Tuesday, you can still get a 2-day extension. You just got to let us know before it expires. Just tell us that you need a couple of extra business days and we'll be glad to issue that. In the compliance package, when you send steps 1 and 2 to us, there's a few things we're going to be looking for in those compliance package. We're going to look at the credit score. So for FHA, VA, and conventional at or below 80% of Freddie Mac's AMI, the minimum credit score for all borrowers is a 640. For the conventional over 80% AMI, the minimum credit score for all borrowers is a 680. The maximum DTI for the step-up program is 45%. And of course, we need approve eligible or accept on your AUS findings. We cannot accept anything other than approve eligible or accept, and definitely not a manually underwritten loan. For FHA and VA, you can use DU or LPA. For conventional, you can only use LPA because it's partnered with Freddie Mac. The other overlay we have is for a tax lien. If there is a tax lien, it will have to be paid off prior to us issuing our approval. It cannot be paid off at closing. It has to be paid off before we can issue the approval. Now, if they owe taxes, current taxes, and it's not a tax lien yet, you just got to follow credit guidelines for that. But if it becomes a tax lien, it's going to have to be paid off prior to us issuing our approval. The income limit for the step-up program for the FHA and the VA and the conventional over 80% of Freddie Mac's AMI is $130,600. That is for the borrower's qualified income. That's the income that your credit underwriter is going to use to qualify the loan. And then the other conventional option is, of course, is limited to the 80% of Freddie Mac's AMI. In November 2018, we changed the step-up program from a household income to borrower's qualified income. Since we did that, we now require that the credit underwriter execute either the VA loans transmittal, the VA loan analysis, the 9900 LT, or the 1008, and they're just signing that the income figures on there are the final income figures, because we do not get any income documents in the step-up compliance package. So we want the credit underwriter to sign that that's the income they're using. We do recommend that you get preliminary credit approval or PMI approval before you lock in with AHFA. You don't have to. We just recommend that because the commitment fee is non-refundable. So if you lock it in, the borrower pays a fee, and they get turned down on your side, they're out that money. So that's why we recommend that you get preliminary approval. It's not required, it's just recommended. You just want to make sure that the income matches throughout the file. I know in your initial 1003 is probably not going to match what it is when you submit it, but your loan transmittal, your 9900 LT, your 1008, your VA loan analysis, and the AUS findings should match on the income. That income should match on those forms. We do allow manufactured homes for FHA and VA only. We allow detached single family consisting of no more than one dwelling unit, attached single family 1 unit townhouse, or Freddie Mac FHA approved condominium. And if it's a foreclosure property, we will just need affirmative title coverage with no exception to the right of redemption. If there is an exception, we would need a surety bond. The property with step up has to be owner occupied. The borrower has to occupy the property within 60 days of closing. It cannot be used for investment properties or second homes. Of course, no refinancing of an outstanding indebtedness, and you just need to follow the FHA 90-day flipping waiver. We do allow a non-occupant co-borrower for the FHA step-up. Now on this, the non-occupant co-borrower, their income, even though it is qualifying income, that income is not used to go towards our qualifying income limit for the step-up program. I know it's going to be on the 9900 as qualifying income, but we're not going to use it towards our limit. Since they're not going to occupy, we're not going to use their income. It needs to be a relative of the borrower, or you just need to follow FHA guidelines on that. We will require an executed 1003 for the non-occupant co-borrower and our non-occupant co-borrower statement in the compliance package. Whenever we issue an approval for the FHA step-up loan, we're going to send you this letter right here. It's the legally binding obligation letter. You have to have this letter in your file when you send it to FHA for insuring. If you do not have this letter in your file, FHA will not insure the loan. So what we do, once we issue the approval, we print this letter out, we email it to the processor on the file. We also upload it to step 2 on Lender Online. So if for some reason you don't get it, you can always pull it from Lender Online, or you can send us an email requesting us to send you another copy, and we'll be glad to do so. For the conventional step up, there, as I said earlier, there's an AIS grant or an affordable income subsidy grant that is associated with the conventional step up. If the borrower's qualified income is at or below 50% of Freddie Mac's area median income, they qualify for a 1% gift or grant. If income is over 50% but does not exceed 80%, they qualify for a 0.5% gift or grant. This money is money that Freddie Mac is going to give the borrower to go towards the transaction, and they can be used for additional down payment, closing costs, and or prepaids. Now, they can't pocket this money, but if they have POC items, like if they pay the appraisal, the earnest money, or the commitment fee, they can get that money back if the seller is paying closing costs, but they just can't pocket this money just to pocket it. How you find out what the AMI is for the property you're buying, you would go to Freddie Mac's site, you click on Home Possible Income and Property Eligibility. Once you click on that, it's going to take you to a screen where you can put in the property address. Once you put in the property address, it's going to break down what 100% the median income is, what 80% is, and what 50% is. Also, when you run the file through your LPA system, it's going to tell you on your findings that they qualify for the AIS grant. For the conventional step up, if the borrower's qualified income is at or below 80% and they qualify for that one, they're going to have reduced MI of 18% coverage. If their income is over the 80%, then they're going to have standard 35% MI coverage. You want to make sure that the LPA key remains the same throughout all submissions. Now, we do require that at least one borrower on the loan take a Homebuyer's Education course. It doesn't matter if they're a first-time home buyer or have owned a few homes. They still have to take a course, at least one of the borrowers. You do not have to be a first-time home buyer for the step-up loan. You can have owned 100 homes in your life. You do not have to be a first-time home buyer. Now, for the Homebuyer's Education, if the borrower is going to use a housing counselor, the housing counselor has to be HUD approved. But they can use FDIC Money Smart. I think that's free online. Freddie Mac's Credit Smart, NeighborWorks. A lot of your PMI companies like Genworth, Radian, MGIC, they have a free course you can take online. Once you get the certificate, if it has a grade on it, it has to be 70 or higher. And of course, it cannot be dated more than 12 months from when you make the step-up reservation. Things to remember about the step-up program: it's a non-refundable fee and is required within 72 hours of making the reservation. All of our reservation or locks have to be made on our lender online site, and you will need a username and password to be able to lock a loan in. Your AUS findings have to be approved, eligible, or accept. The minimum credit score for the FHA, VA, and AHFA Advantage conventional at or below 80% of Freddie Mac's AMI is 640. For the conventional over 80% AMI, the 680 minimum score. Cannot accept any manually underwritten loans, and of course the DTI is the maximum is 45%. On the DTI, there is one caveat to that. If you have one where the homestead has not been claimed and the taxes are putting it over the 45% and you still get approved eligible on your AUS findings, we can make an exception for that as long as whenever the taxes come in, it puts them under the 45%, we can make an exception. You just have to send us the loan transmittal and the AUS findings showing what the payment is with the higher taxes and with the lower taxes, and it still gets approved eligible. We can make an exception for the 45% DTI. We don't want to penalize the borrower for the seller not claiming homestead on the property. Some fees we have, costs and fees we have with the step-up program. Of course, there's a non-refundable commitment fee. You can charge any of your regular closing cost items associated with the first mortgage as long as they're customary. You can charge the origination fee if you want to. You don't have to. You just got to make sure that this is not a high-cost loan. Also, we do charge a $200 loan funding fee and a $76 tax service fee. On the second mortgage, you can charge a per diem interest and the recording and transfer tax cost and the MERS registration fee. For the AIS grant, it's not really a mortgage, it's a grant, so there's no fees associated with it. I don't know if I said this earlier. I will email everybody a copy of the presentation I'm using today. When the training's over, I will send out an email with my slides attached so you can have them for your records. That's really the training for the step-up portion of it. Just a thing to remember is the first mortgage, you just follow standard credit guidelines for the first mortgage. The compliance package is where we're looking for the credit score, make sure there's no tax liens, the DTI is correct, they're under the income limit. There's only a few things we look for in the compliance package. The rest of the closing is going to be for lender online. So for lender online, that's where you're going to go lock a loan in, you're going to submit loans there, you do everything with us on lender online. And to be able to get a lender online, you're going to have a username and password. Your company should have appointed 2 people to be a portal administrator for our lender online site. They will be one of those 2 or both of them will be able to give you a username and password for the site. Once you get it, you want to make sure that you log in at least once every 90 days so your account will stay active. If for some reason your account goes to inactive, you just get with your portal administrator, They click one button, they put you back to active. It's not a big deal. If the portal administrator goes inactive, they will have to send me an email and I can put them back to active. What you can look for on our site, you can look at bulletin board notices. That's anytime we make any rate changes, we do any changes to the system, we'll put that in the bulletin board notices. You can check interest rates, you can make reservations, you can submit compliance packages and the closed loan files, and you can check loan status. When you log into, when you sign on to the site, you're going to have to log in. One thing you want to keep in mind, the username and the password is case sensitive. So you got to be exact on both of them. I know some sites you don't have to be exact on the username, but you do on our site. It has to be, it's case sensitive for the username and the password. So once you sign in, you come to this screen. The top toolbar is our secondary toolbar. That's where you can see the bulletin board. That's where we put the notices. There's program docs. That's got MCC and step-up documents under that tab. And then there's marketing material. That's good for a loan officer. If they do any kind of open houses, you could print out flyers for the step-up program, for the AIS grant, for MCC, for anything. And there's a spot on the marketing material where you can copy your business card and then make copies, and you put that into open house or give it to realtors, whatever you want to do with it. The primary toolbar is in the middle of the page. That's where you go make reservations and check loan status. When you get ready to make a reservation, you're going to click on New Reservation. It's going to show you the different lock periods you can get for the different programs. You pick the one you want. It goes to this screen. You want to make sure the little circle under, in my little red circle, there's a little bitty circle you see out beside the 10-year. You want to click that, and then you want to click Continue with Additional Mortgages. If you click the one without additional mortgages, you'll only lock in the first mortgage and not the second. If for some reason you do only lock in the first mortgage, you will not be able to lock the second mortgage on your side. You have to send us an email and get us to lock the second mortgage for you. And it's not a problem. You just won't be able to do it yourself. You'll have to get us to do it. So once you click Continue with Additional Mortgages, got to go to this screen. You can see it's got the first and second mortgage there. If for some reason you do click without and you get to here, you can always, I guess you can just go backwards and then click with additional. But you want to complete all boxes with the red asterisk. You go to the next page, do the same thing. But in the bottom section where it says loan officer, depending on how who's going to lock in loans for your company, we have some lenders that have a lock desk that locks it in. You want to make sure whoever locks it in puts the correct loan officer's name under loan officer. The reason why the access level that loan officers have normally are just to see their own personal loans. So if somebody locks it in and does not have their name in there, they will not be able to view their loan. Even if you call us and we change it on our side, the loan officer will not be able to view the loan. So you want to make sure whoever's locking it in puts the loan officer's name in there correctly. Once it's done, you hit the submit button. It will let you know that it has been approved. You'll get a little form that says reservation approved. You print that out, put it in the file. Once you lock it in, then you can go to the loan status tab. Under the quick search, you can put our reservation number in there, or if you don't have that with you, you can go under advanced search, hit borrower's name, put the borrower's last name, and click go. It'll find your borrower. It'll have them below, and in that box out beside the borrower's name where it says view, reprint, PDF docs, and eDocs, I'll talk about those in just a minute, but that's where you're going to do everything. So once you lock it in, if you click on the PDF docs, you can print all of the documents that pertain to this file. And I think most of them are already completed, like the reservation commitment form, rate commitment form will be completed. You just need to make sure you complete the bottom section. So when you get ready to submit a file to us to review, you're going to click on eDocs. That's where you submit steps 1 and step 2. You're going to click on Add New. Okay, so there's going to be two different checklists for the step-up program. You're going to have checklist 1, which is going to be your reservation part. It's going to have your rate commitment form and your money, your commitment fee in that one. That's going to be uploaded in step 1, and the checklist is called Reservation Package number 1. Your checklist that has the 1003, loan transmittal, AUS filing, contract, everything else, the meat of the file is going to be in step 2, and the checklist is going to be called Request for Conditional Commitment 2. So when you get ready to upload them, also when you upload them, you want to make sure you upload them in the order of the checklist. For us to continue to give, we give 24-hour turnaround time on our files. So for us to continue to give 24-hour turnaround time, we like the file to be in order. And plus our auditors also like the file to be in order. But when you get ready to upload a file, you click Add New. It's going to go to this screen. You want to, in the box where it's got the double looking arrow, you want to put what it is, if it's step 1, step 2, whatever you want to name it. You click there. Then you click the box that says click here. It's going to go to this screen. You'll browse your computer looking for the file that you saved to your computer. You're going to click upload. Then it's going to tell you it's been uploaded successfully. Then you want to save it. Once you hit the save button, it's going to say it's been saved. So right now, all you've done is uploaded the file to our system, but we don't know anything about it in compliance yet. So it's uploaded. Then it's going to look like this right here. It's going to show it's been uploaded, but it's actually going to show a blank out beside where it says last day modified. It's going to be a blank. You got to hit the submit button. Once you hit the submit button, we in compliance here at Alabama Housing get a notification that says, hey, lender has uploaded this package for your review. If you do not hit the submit button, we don't get notifications, so we don't know what's out there. It's been uploaded. We just have not gotten word that it's been uploaded. So you have to hit the submit button. Now I tell all lenders, we do work on a 24-hour turnaround time. If for some reason you've uploaded a file and it's been over 24 hours, you're welcome to send us an email saying, hey, look, I just want to let you know I uploaded a file and it hadn't been reviewed yet, or did I upload it right? Because if we hadn't reviewed it, one of 3 things could have happened. You could have uploaded it and didn't hit the submit button, or you could have uploaded it and hit the submit button, but we accidentally deleted the notification, or you uploaded it, hit the submit button, and we didn't get notification. Every now and then we get a update to our system. For some mysterious reason, we don't get notifications for a day. And it hadn't happened in a while, but it has before. So we don't want you waiting on us for 2 or 3 days to see if something's been approved. If you go out there to review it and to look to see if we reviewed it and we don't have anything, I'm going to show you in just a minute what it's going to look like. But we don't have out there, we've reviewed it, send us an email or give us a call, just checking status. So once you've submitted it, now you can click on the view. That's where you go to check to see if it's been reviewed. So you log in, you find your borrower. Out to the left, you're going to click the view button. Once you do that, it's going to come to this screen where it says, in the circle where it says stage, status, and date. It's going to say it was reviewed, it's pending, and then your conditions are going to be over to the left. Also, whenever it's been approved, you're going to do the same thing. You're going to go to view. It's going to come up right here, and under the stage, status, date section, it's going to say committed, approved. That means it's final approval. Our manuals for the Step Up and the MCC program are out on all regs. That's a free site to you. What you do is go onto our website. This says ServSol, but you can go on to AHFA.com. You can click under the lender section, then click under lender resources. It's going to bring you to this screen. In the red box, there's a link to go to all regs. You click on that, then you have to put your company email address in there twice, and then you get to go on the site. Once you get on there, you'll check, I think you click on a box that says HFAs or something like that, then you want to make sure you click on Alabama, because since we do service for North Carolina, Arkansas, Mississippi, we also have their manuals out there, so you want to make sure you click on the right state. Once you click on Alabama, then you can see our step-up manual and the MCC manual. We also have our loan delivery and purchase guidelines out on Lender Online. That's a very valuable resource for your closing department. It has a lot of our closing procedures in there and what we're looking for. That would be nice for them to be able to go out there and look. So some important contact information. I'm Tony Lee, and I'm the compliance supervisor here at Alabama Housing, and that's my email address. Lisa Treese is our operations manager, and that's her email address. And Brian Hunt is our assistant operations manager. That really concludes the training. Do I have any questions?